The dollar just crossed a threshold that financial historians will mark as the moment everything changed. And I'm not talking about some abstract economic theory or distant future scenario. I'm talking about something that's happening right now, in real time, that's going to reshape your financial reality, whether you're paying attention or not. Let me show you what I mean. Right now, as I'm recording this, gold is trading near all-time highs, pushing past levels that would have seemed impossible just a few years ago. Silver has exploded higher, breaking through resistance levels that held for decades. But here's what most people are missing. This isn't just another bull market rally. This is the market screaming at us that something fundamental has broken in the global financial system. Think about what's actually happening here. The world's reserve currency, the dollar that's been the bedrock of global finance since World War II, is losing its grip. And it's not losing it slowly. It's not some gradual decline we can adjust to over generations. The acceleration we're seeing right now is unlike anything in modern financial history. You know what's fascinating? When you look at the data, really dig into what central banks are doing versus what they're saying, the picture becomes crystal clear. They're not just buying gold as a hedge anymore. They're buying it like they know something we don't, or maybe more accurately, like they know something they're not telling us. Central banks added more gold to their reserves in recent quarters than at any point since the Nixon shock. Think about that for a second. These are the institutions that print money, that control monetary policy, that have access to every economic indicator and intelligence report you can imagine. And they're converting their dollars into physical gold at a pace that should make every American sit up and pay attention. But here's where it gets really interesting. It's not just the amount they're buying. It's who's buying and where they're storing it. Countries that have historically kept their gold in New York, in the Federal Reserve vaults, are now repatriating it. Germany started this trend, then the Netherlands, then Austria. They're literally flying their gold home. Why would you do that unless you had serious concerns about the stability of the system? And then there's what's happening in the East. China's been accumulating gold for years, but the pace has intensified dramatically. They're not just buying through official channels anymore. They're encouraging their citizens to buy. They've made it easier to purchase gold than ever before. They're building a parallel financial system, one that's increasingly independent of the dollar. Russia took it even further. After the sanctions, they didn't just complain, they acted. They've been systematically reducing their dollar holdings and converting them into gold and other hard assets. They're trading oil for yuan, then converting yuan into gold. They've essentially created a sanctions-proof system, and other countries are watching very carefully. Now, before we go further, I want to mention something quickly. If you're watching this and you've got retirement savings, I put together a free guide that shows the saving secrets thousands of American retirees are using to protect their hard-earned wealth. It's in the description below. Just something to check out while we continue. Let me tell you a story that perfectly illustrates what's happening. There's a guy I know, worked his whole life in manufacturing, saved diligently, did everything right, had about $400,000 in his 401k, mostly in stocks and bonds like everyone tells you to do. He watched the dollar's purchasing power erode year after year. His grocery bill doubled. His insurance premiums skyrocketed. His retirement dreams started looking more and more uncertain. But here's what really got him thinking. He started noticing that every time there was a crisis, every time the government announced another spending package, every time the Fed hinted at more stimulus, gold would spike. Not sometimes, every single time. It was like clockwork. The market was telling him something his financial advisor wasn't. So he started digging. He looked at what happened in the 70s when inflation really took off. Gold went from $35 an ounce to over $800. That's not a typo. A 20-fold increase in a decade. The people who owned gold didn't just preserve their wealth, they multiplied it while everyone else watched their savings evaporate. He looked at what happened in 2008 when the financial system nearly collapsed. While the stock market was cut in half, while real estate crashed, while people lost their homes and their retirement accounts, gold climbed steadily higher. It was the one asset that actually did what it was supposed to do, protect wealth during a crisis. But what really convinced him was looking at what's happening right now. The debt situation has gone from concerning to catastrophic. We're adding trillions to the national debt every year, not billions, trillions. The interest payments alone are becoming one of the largest line items in the federal budget, and there's no plan to fix it, None. Both parties just keep spending. You know what that means? It means the only way out is to inflate the debt away. Print more money, make the debt worth less in real terms, and hope nobody notices that they're also making your savings worth less in the process. It's the oldest trick in the government playbook, and it's happening right now. Look at what's happening with the BRICS nations. Brazil, Russia, India, China, South Africa. They're not just talking about creating an alternative to the dollar anymore. They're doing it. They're settling trade in their own currencies. They're building payment systems that bypass SWIFT. They're accumulating gold as the foundation for a new monetary system. And it's not just BRICS. Saudi Arabia, the country that's been the cornerstone of the petrodollar system since the 70s, is now accepting yuan for oil. Think about what that means. The entire petrodollar system, the thing that's given the dollar its reserve currency status for 50 years, is being dismantled piece by piece. Here's what most analysts are missing. They look at these developments in isolation. China buying gold, Russia de-dollarizing, BRICS creating alternative systems. They treat each one as a separate story. But when you step back and look at the big picture, you realize these aren't separate events. They're coordinated moves in a larger strategy to end dollar dominance. And the crazy part? The US is accelerating this process with its own policies. Every time we weaponize the dollar through sanctions, we give other countries a reason to find alternatives. Every time we print trillions of new dollars, we erode confidence in the currency. Every time we add to the debt, we make it more obvious that the only way out is inflation. Let me give you some context on what's happening in the physical markets right now. The premiums on physical gold and silver, the amount you pay above the spot price to actually get your hands on metal, have been elevated for months. That's not normal. In a healthy market, premiums are tight. When premiums blow out, it means there's a shortage of physical metal, even while the paper price suggests everything's fine. You've got this massive disconnect between the paper markets and the physical markets. On the COMEX, you can trade contracts representing thousands of ounces of gold, but try to actually take delivery of that gold, and suddenly there are delays, complications, excuses. The same thing's happening in silver, only worse because silver's industrial demand is through the roof. Think about what's required for the green energy transition everyone's talking about. Solar panels need silver. Electric vehicles need silver. The electrical grid upgrades need silver. We're talking about industrial demand that's going to dwarf anything we've seen before, and we're already running supply deficits. The math doesn't work unless prices go significantly higher. But here's where it gets really interesting for anyone thinking about their retirement. The traditional 60-40 portfolio, 60% stocks, 40% bonds, that's been the standard advice for decades. But that model was built for a different world. A world where bonds actually paid meaningful interest. A world where inflation was under control. A world where the dollar was unquestionably strong. That world doesn't exist anymore. Bonds are paying negative real yields when you account for inflation. Stocks are trading at valuations that historically precede major corrections. Real estate is priced for perfection in many markets. Where exactly are you supposed to put your money to preserve purchasing power? This is where gold and silver come in. Not as speculations, not as get-rich-quick schemes, as insurance, as the one asset that's maintained its purchasing power across centuries, across empires, across every monetary system that's ever existed. You know what an ounce of gold bought in Roman times? About the same as it buys today when you adjust for quality. A fine toga, a good pair of sandals, a decent meal. Fast forward 2,000 years, and an ounce of gold still buys you a quality suit, good shoes, a nice dinner. The purchasing power has remained remarkably stable. Compare that to the dollar. What did a dollar buy 100 years ago versus today? It's not even close. The dollar has lost over 95% of its purchasing power since the Federal Reserve was created, and the pace of that decline is accelerating. Now, if you're sitting on retirement accounts, if you've got 100,000 or more in IRAs or 401ks, there's something you should know about. Gold IRAs. This is a way to get physical precious metals into your retirement account without triggering taxes or penalties. I put together a comprehensive guide on how this works. It's in the description. Covers the whole process, the rules, the benefits, the things to watch out for. Because here's the thing. We're living through a monetary transition that happens maybe once or twice a century. The last time something like this occurred was when we went off the gold standard. Before that, it was the Great Depression. These are generational events that reshape the entire financial landscape. And the people who recognize what's happening early, who position themselves accordingly, they don't just survive these transitions, they thrive. While everyone else is panicking about their devaluing dollars, they're sitting on assets that are appreciating in real terms. Let me tell you what I'm seeing in the technical charts right now, because this is important. Gold has broken out of a multi-year consolidation pattern. These kinds of breakouts, when they're confirmed with volume and follow-through, they typically lead to sustained moves higher. We're not talking about a quick pop and drop. We're talking about the beginning of a major trend. Silver's even more interesting from a technical perspective. It's been coiling in a massive base for years. The longer a base builds, the more powerful the eventual breakout tends to be. And we're seeing that breakout happen right now. The momentum is building. The moving averages are aligning. All the technical indicators that matter are flashing buy signals. But forget the technicals for a second. Let's talk about the fundamentals, because that's what really matters in the long run. The supply and demand dynamics in precious metals are unlike anything we've seen in decades. On the supply side, we've got problems. Major gold mines are depleting. The easy gold has been found and mined. New discoveries are rare and expensive to develop. It takes years, sometimes decades, to bring a new mine online. And with environmental regulations getting stricter, with permitting processes getting longer, with costs rising across the board, the supply response to higher prices is going to be muted. Silver's even worse. Most silver comes as a byproduct of other mining operations. When copper mines or lead mines slow down, silver production drops even if silver prices are rising. You can't just turn on more silver supply like you can print more dollars. And then there's the demand side. Central bank buying is at historic levels. Investment demand is surging as people wake up to what's happening with the dollar. Industrial demand for silver is accelerating with the green energy transition. Jewelry demand in Asia remains strong. Every category of demand is either stable or growing. You know what happens when you have constrained supply and growing demand? Economics 101. Prices rise. It's not complicated. The only question is how high and how fast. Now let me address something that always comes up. People say, but gold doesn't pay interest. It doesn't pay dividends. It just sits there. And you know what? They're absolutely right. Gold doesn't pay you anything. But here's what they're missing. Gold doesn't owe you anything either. Your dollars? They're someone else's liability. Every dollar is a promise to pay, backed by the full faith and credit of a government that's $35 trillion in debt and counting. Your bonds? Someone's promise to pay you back with interest, using dollars that are being devalued as we speak. Your stocks? Claims on companies that are subject to economic cycles, management decisions, competitive pressures, regulatory changes. Gold is nobody's liability. It's not a promise. It's not a claim on future cash flows. It's just gold. It exists. It's real. It's tangible. And that's exactly why it's valuable in times like these. Think about what happened in Weimar Germany. People who held paper marks saw their life savings become worthless, literally worthless. You've seen the pictures of people using wheelbarrows full of cash to buy bread. But the people who held gold, they preserved their wealth. They could still buy food, still pay rent, still maintain their standard of living while the currency collapsed around them. Or look at what happened in Zimbabwe when their currency hyperinflated, or Venezuela more recently, or Argentina, or Turkey. In every case, the people who held precious metals maintained their purchasing power while everyone else was devastated. And before you think, that can't happen here, we're America. Remember that every empire in history thought the same thing. Rome thought it was eternal. The British Empire thought the sun would never set on its dominion. The Soviet Union thought it was the future. They were all wrong. I'm not saying America is going to collapse tomorrow. I'm saying that the laws of economics apply to everyone, including us. You can't print unlimited amounts of money without consequences. You can't run unlimited deficits without eventually paying a price. You can't weaponize your currency without driving people to find alternatives. And that price, those consequences, they're starting to show up now. Inflation that was supposed to be transitory has become persistent. Interest rates that were supposed to stay low forever have spiked. The dollar that was supposed to remain dominant is losing ground. Here's what's really concerning. The Fed is trapped. If they raise rates to fight inflation, they risk crashing the economy and making the debt unsustainable. If they keep rates low, inflation accelerates and the dollar weakens further. There's no good option. They're going to have to choose between bad and worse. And you know what they're going to choose? They're going to choose inflation. Because inflation is politically easier than recession. Inflation is a hidden tax that most people don't fully understand. Recession is obvious, painful, and gets politicians voted out of office. So they're going to keep printing. They're going to keep spending. They're going to keep inflating the debt away, and your dollars are going to keep losing purchasing power, unless you do something about it. This is why gold and silver aren't just investments. They're insurance policies against monetary mismanagement. They're protection against the inevitable consequences of the policies we're seeing right now. And the beautiful thing is, you don't have to predict exactly when or how this plays out. You don't have to time the market perfectly. You just have to recognize the trend and position yourself accordingly. Look at what's happening with the younger generation. They're buying gold and silver in record numbers, not because they're gold bugs or conspiracy theorists, because they're looking at the math and realizing that the traditional path to wealth, the one their parents followed, doesn't work anymore. They can't afford houses. They're drowning in student debt. They're watching inflation eat away at their wages faster than they can get raises. They're seeing their parents' retirement accounts barely keep up with the cost of living. And they're saying, there has to be a better way. And there is. It's the same way people have preserved wealth for thousands of years. Real assets, hard assets, things that can't be printed or inflated away. Now, I want to be clear about something. I'm not saying put everything into gold and silver. I'm not saying sell all your stocks and bonds and go all in on precious metals. That would be just as foolish as ignoring them completely. What I am saying is that if you don't have any exposure to precious metals right now, you're taking a massive risk. You're betting everything on the continued stability of a monetary system that's showing cracks everywhere you look. Diversification isn't just about spreading your money across different stocks or different sectors. Real diversification means having assets that perform differently in different environments. And precious metals are the ultimate diversifier because they tend to do well exactly when everything else is struggling. Think about your retirement portfolio. If you're like most people, it's heavily weighted toward paper assets, stocks, bonds, maybe some cash, all denominated in dollars, all subject to the same systemic risks, all vulnerable to the same monetary policies. What happens if we get another 2008-style crisis? What happens if inflation keeps running hot? What happens if the dollar loses its reserve currency status? Your entire portfolio could be at risk, but if you've got a meaningful allocation to precious metals, you've got a hedge. You've got something that's likely to hold its value or even appreciate while everything else is declining. You've got insurance. And here's the thing about insurance. You don't buy it because you know something bad is going to happen. You buy it because you don't know what's going to happen, and you want to be protected either way. I've been studying markets for decades. I've seen bull markets and bear markets. I've seen bubbles inflate and pop. I've seen currencies rise and fall. And I can tell you with absolute certainty that what we're seeing right now in precious metals is not a bubble. It's not speculation. It's not irrational exuberance. It's a rational response to irrational monetary policy. It's people waking up to the reality that the emperor has no clothes. It's the market's way of saying, we don't trust what you're doing with the currency. And once that trust is lost, it's incredibly difficult to get back. Ask anyone who lived through a currency crisis. The psychological shift that happens, the loss of confidence in the monetary system, it's profound and lasting. We're in the early stages of that shift right now. Most people still trust the dollar. Most people still believe the government has everything under control. Most people still think this is all going to work out fine. But the smart money, the people who study history, the people who understand how these things play out, they're positioning themselves differently. They're buying gold. They're buying silver. They're getting out of the dollar before everyone else figures out what's happening. Because here's the brutal truth. By the time everyone realizes what's happening, it'll be too late. The prices will have already moved. The premiums will be even higher. The availability will be even more constrained. The opportunity to protect yourself at reasonable prices will have passed. This is your moment, right now, while most people are still asleep, while the mainstream media is still telling you everything's fine, while your financial advisor is still pushing the same old 60-40 portfolio. You have a choice to make. You can keep doing what everyone else is doing, hoping that somehow this time will be different, that somehow we'll avoid the consequences that every other empire faced when they debased their currency. Or you can take action. You can protect yourself. You can position your portfolio for the reality we're facing, not the fantasy we're being sold. For those of you who've watched this far, who've really paid attention to what I've been showing you, I want to offer you something special. That free guide I mentioned earlier, it's in the description. But if you're an American retiree with at least $100,000 in any retirement account, and you mention you watch this video, you'll also get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just education on how to protect what you've spent your life building. Because that's what this is really about. It's not about getting rich quick. It's not about speculation or gambling. It's about protecting the wealth you've already accumulated. It's about making sure that the retirement you've planned for, the security you've worked toward, doesn't evaporate because of monetary policies you have no control over. The dollar just hit the point of no return. The question is, what are you going to do about it?